Well, this is Richard C. Wilson of the Family Office Club. Today I have with us Bill Stueber from Telecom Partners Group. Welcome, Bill.
Thanks, Richard. Good to be here.
Sure. Yeah, and thanks for being part of the Family Office Club. What is it that your team does?
We do primary due diligence on telecom, asset valuations, technology, infrastructure. We've been in the space for close to 4 decades, which makes me feel a bit old in saying that. But we've been working in the telecom space with a particular emphasis on wireless and spectrum and infrastructure.
Okay. And for telecom, that would be the full range from it could be digital technologies to hardware, cell phone antennas, and the full spectrum in between, or what would be the full scope of that?
Absolutely. It's a great question because when you think of things like 5G, that's exactly what's going on, is that digital and infrastructure and wireless and equipment are all collapsing because the equipment is becoming virtual, kind of like how we use Dropbox for storage. Everything is being digitized, and dozens of different protocols that we've gathered over the years are being condensed down into one. So yes, and in 2 or 3 years, they'll all just be something that comes over the internet in an umbilical cord.
Sure. The 2,000 engagements is incredible. What is the number one lesson that's really come from seeing that many deals, or the number one thing which is just foundational to the deal going well?
It's understanding really what the asset and the questions are. And yeah, I get that from some of the partners that we book the engagements through. They refer to as the Brett Favre of telecom deep dive. I haven't missed a game. But generally, Wall Street or typical accounting looks at something and they just use comps, and those comps become the way of valuing it. And going back maybe 10 years, what we're really looking as a technology has an enormous impact, but in some cases it's binary. So if you have spectrum and a lot of people buying spectrum, and that block is not going to be used, it's not a question of is it worth 2 billion or 1 billion, it may be worth nothing. And in some cases, that's exactly what happened. It becomes binary. The other thing is that not until long ago, private equity has had a very large impact. There's a lot less rules around it. Things like spectrum and infrastructure were only owned by carriers. So as we get trading partners in, it extends the highs and the lows, the trading range, the value of that asset, and it exposes the investors to significantly more risk, particularly in debt.
Sure. One thing I think that's unique about your firm is the depth of due diligence expertise, but also we have some members who are independent sponsors, or they run an investment fund. And I just want to make it clear for those watching, and correct me if I'm wrong, but I think your business model is to support the private equity funds, the sovereign wealth funds, the family offices, and you're going to help them with valuation, due diligence, making sure that they're represented well on their side of the table, whatever side that is within the telecom industry, right?
It's exactly. We don't ever take positions in them. And it's interesting, we sort of backed into family offices many years ago just in private equity. Private equity used to be 5 or 10% of our business. It's close to 40% now every year. And became a member here, simply because it's a very concentrated, viewpoint for looking at how the market is developing. And it's a great market. And being able to get a quick no in a lot of cases on deals, everybody realizes is also very valuable as well. So we can, in a lot of cases, look at something in an hour or two and say, these are the risk factors. Just there's so many other places to look. If you'd like some suggestions, here they are. But this is not a good place for you to pick among, where it is, or this is something that just has, some binary risks. That unless it's part of a larger strategy, they're probably easy to avoid. I'd say 50 or 60% of the things we look at, we come to a quick no first. And in a lot of cases, it's the largest value. Just saves time and money.
Sure. I'm guessing not everyone sees your use as this way, but I'm imagining that some people who are in a deal origination team would be good checking their strike zone against you, or evolving their strike zone so that they only spend time on the ones that are going to pass your first screen of due diligence, just to save everybody time, right?
I've got one client. I was an operator, CEO for 20 years, the last 18, as a Wall Street analyst, and I've got a client from a tier 1 top 3 firm that's famous for send something over. He goes, I don't want to talk. I just want a yes or no. And I'll say no. He goes, why? 2 sentences. Like, good, talk to you on the next one. He just, if it's an absolute no, he doesn't even want to think about it. And this is a multi-trillion-dollar fund. He's just, why should I do it? If you have questions, imagine what's going to happen when we both start looking at it hard. Yeah,
That's great.
Exactly those short questions.
That's great. Yeah, I was on the phone with my attorney yesterday, and he was going through all the complex options. I said, look, 95% of the time, you go through all the logic, you know our business, and I just agree with what you recommend at the end. So I want to understand what's going on, but tell me your recommendation from the beginning so I'm not hashing it out in my own brain.
Right.
If he's the expert on structuring, right?
Yeah. It's like those lightning rounds. You have other clients and we go through 10 things. We just want the lightning round. First impression, good, bad, stay away, good, bad. All right, good. So we've got 3 out of those. Let's talk about those 3. You don't want to know the other reasons? Like, no, you said bad way too fast. Like, I know it's bad.
Right, that's great. What's the number one due diligence question that an investor should be asking a firm like yours, whether anybody ever asks it or not?
Really understanding what the key metrics to distill down what the bet is and what the time horizon is. A lot of times you get elaborate, as a precursor, I get a lot of materials, I get things from my client, even if it's, a short engagement. And I don't get if it's debt or equity, or if it's 2-year or 5-year. And those are such amazingly impactful answers, because if you're looking at a technology in 5G, that a company will ramp and grow 30 or 40% in revenues a year for 3 years, and then it will become part of something 5G does right out of the box. It's a much different answer if that's 5-year debt or 10-year debt. So understanding what they are, and then understanding what the real levers are. You have a company, they're growing revenues. Are they looking to become a company like Qualcomm, where it's embedded and they're going to become a staple? Or are you looking at someone that's part of 8 or 10 or 12 technologies that eventually would be 1 or 2, and where the target is going to roll up to? Are you looking to sell that to an industry staple so it gets built in? Or are you really looking to become dominant? And in a lot of cases, you understand the path on that. If it's something that's key to a carrier, in most cases, my vote would be, if you're one out of 10 looking for Verizon or AT&T to decide on your technology and pay you a royalty, I don't think that's a good bet. Whereas if, there's something on the outside of that, or you're looking, at a different revenue model, or maybe there's, different strategies. So it's really understanding the time horizon of the investment and distilling the key drivers down to a very, very short list and drilling in on them.
Okay, great. Yeah, appreciate you sharing that. It made me also think that perhaps someone in the family office club could benefit, whether they're a family office or an operating business CEO, by helping you prepare them for sophisticated due diligence, prepare the data room, maybe even think of a few strategic players like corporate venture capital groups that would be realistic to go to. I'm imagining you've been engaged many times that way as well.
Yeah, and I got to tell you, that from not just the audience, I really enjoyed the family office, because you're dealing with decision makers, you're dealing with a much more flattened curve. It's very enjoyable. You get to make a difference. You're able to put it out there. And I'm not saying that there's not value, but when you're literally in the middle of 60 other deals, which most banks just have a finite investable universe and are constantly turning over. And then you get to an environment where you have a team of 2 to 8 people that are focusing on a question and really trying to understand the trajectory of that business and the owners and how it's going to be, and maybe it'll be active or not. It's very fulfilling, particularly when you've spent more than half my life running companies. You can appreciate that there's a high degree of satisfaction in doing that. Absolutely. So yeah, we do get involved in that. In some cases, we'll fly out and have a meeting when they meet with management. That's a very common thing. Is we want you there. Why? To watch their answers in person, only ask the questions. And I'm like, that's fair. Okay, I'll get on a plane from New York to San Francisco. You're absolutely right. I can't say no to that. Because it's invaluable. And
that's the exact word I was just going to use.
Yeah. Sometimes it's exactly what happens. Is you just look and go, they really mean well, but this team is not they're just not going to be able to make that break to that. Or, you know what, there's something there, they need help in these areas, but they're very open. And you know, these are the ways that you might help. And that'll never come out unless you've had a meeting, maybe lunch, you know, and some time to talk. The social part of it really lets you deep into a management team.
Right, right. No, I couldn't agree with that more. My experience sometimes in a complex negotiation, you know, I don't consider myself a complete dunce in like getting it done, but sometimes not having a second brain and you move too quick and you say one thing, hard to take that one thing back in the negotiation. You know, so it's very helpful to have a team and that someone like yourself, you know, on your shoulder to help keep things on the rails and interpret things, right?
It validates. I was speaking in front of a group at USC. I think it was in December or so, and I was just, you know, giving my opinion of where we were going with 5G. And the moderator opened it for questions, and I said, "Well, you know, this is just, you know, one way of looking at it. You know, aren't there many other, you know, ways of looking at it?" And the moderator broke in and said, "Well, we called and asked for the chairman of the FCC to speak here, and he wasn't able because of scheduling, but he did say you should talk to Bill Stueber because I learned about 5G from him." And I'm like, oh my Lord, I hope somebody's videoing this. I have a bunch of filmmakers here. But there's not as much guesswork as you would think. There's like deep dive and work makes an enormous difference in this. Like there's no guesswork when 5G will be rolling out because we've been doing it for 2 or 3 years. What the impact is, and the reason we don't see as much of it is it's not viable for a carrier to push it. But 5G impact is enormous, and some of the estimates are staggering. 2035, 17 trillion is the tangential impact. And it's not that it's another wireless service, it's that it digitizes everything, and it's healthcare, and it's, you know, it's transportation, security, IoT. It just makes a wireless digital layer.
Right, right. Yeah, makes sense. What would be a $100,000 piece of advice that you could leave people with today?
You know, we're looking at 3 trends. Everybody likes to, you know, put a name on something. The worst part is at a dinner party, you're there and someone asks, "Can you explain 5G to me?" It's like, between drinks and appetizers, or do I get the whole dinner to do this? Is that there's 3 major trends that we're going through that are absolutely going to transform, you know, everything in terms of business, but certainly in telecom. One is digitization. There's no turning back from it. Everything goes to a common platform, and that it's OTT. We see, you know, cable, all of that. They're losing 5-6% a month in some cases. The other is cloud, much the way we all use Dropbox. Everything is going to migrate to that. And the third one is virtualization of all of the equipment and all of the infrastructure so that everything is provided from not a stable point. And that just takes the gloves off. It lets you put data centers or cellular network components in a place with simply by running a piece of fiber. So it's not there. And that flattens CapEx out. In some cases, it saves 70-80% of CapEx. So it's important for new business models because it can happen, but it's really, really important for investing in anything that's more than a few years old, because that CapEx in a lot of cases was written off over 20 or 30 years amortized. And there's just not going to be that value left. So you have this sticker shock of value on the balance sheet. And we see, you know, high profile examples of Windstream and Frontier like that now, but there's dozens of others that are out there that aren't as visible, and we will see thousands of others coming, because it's like the carburetor to fuel injection for an engine. It's a one-way transition.
Right, great. Yeah, I mean, a lot of people have been talking about how the pandemic has just sped up a lot of those trends as well, you know, and just, you know, pressed them forward. I mean, look, you and I doing this interview here versus having you speak at one of our events, for example, is a perfect example of that, right?
The numbers on that are staggering, Richard. Is like 60% of cell switching is down because we're just all not getting in a car and going into an office. Like my office is in, you know, Manhattan. I haven't obviously been in Manhattan in a while, but the holes that we have are the suburbs where we all are. It's woefully underbuilt. So a lot of the 5G has shifted into suburbs which has delayed it a little bit. But the biggest problem from COVID is that we'll be about 20% down in overall CapEx spend, not because of lack of revenue or interest. It's that we just can't get work crews out and inspectors, for zoning. It's literally logistical details. That if it's a tower, you can't get an inspector, you can't get zoning, you can't get work crews. People are getting certified with masks. So, but the effect of everything we're looking at from 2022 to 2023 is that we'll be up 7 to 10% in spending because of COVID. Exactly what it points out. So it's accelerating.
Sure. Yeah, it seems like it is for sure. If anyone would like to get a hold of Bill, they can go to Telecom Partners Group's website, which is tpgllp.com, tpgllp.com. And just so everyone knows, Bill has over 38 years of experience in the industry, and the deep dive on due diligence, valuation, and independent research in the telecom space seems like, where your expertise, goes 1,000 miles deep. And the thing I like most is that 38 years being focused on it. You didn't wake up yesterday and start to go into crypto. No offense against crypto people, but someone who's done something for 12 years, 15 years, 30 years, it's hard to compete with that level of credibility in the marketplace. And any last words from you, or preferred way to get a hold of you, whether it's phone or email or LinkedIn?
Email is the easiest way. If you please, publish. LinkedIn, very, very visible. The general forums obviously are not as focused, but we definitely give a priority to your subscribers. We truly enjoy working with family offices, but email or LinkedIn would love. If you have a question and it's just an appropriateness of an investment or the space, be more than happy to look at it and give you the quick.
Great. And I know we had we had 48,000 people download the podcast last month. So there's going to be a lot of people listening to this in audio format. So Bill Stueber's last name is Stueber, just so you can find him on LinkedIn easily in case you want to take down a note and you've got a way to work together with Bill. So appreciate your time here today, Bill. I'm looking forward to seeing you in person at one of our events once we are allowed to host those again.
Absolutely, Richard, when the world returns to normal again. If it does, it's full.
Right. Thanks for your time here today.
Thanks, Richard.
Take care.